first idea, Allto Gas.
Yeah, I like Allto Gas always. I mean, it's been a recurring topic, but I haven't picked it in quite a while because the shares have been so strong. So more recently, the company had a softer quarter, and it's important to know, again, as the long-term investor that knows the company, why that softer quarter occurred, so that you can hopefully buy more if it's a buying opportunity.
Right.
And so the softer quarter occurred mostly due to messiness in the numbers with their petroleum export business, the liquid propane, liquid butane off of the West Coast.
Yep.
And that's going to be transitory. That's a business that they're continuing to sort out. There was rail inefficiencies and costs with the railing the propane in, but long term that's a good business. The most important thing to look at in this company is the utility business, which is above average growth because it was underinvested prior to them owning it and then during the acquisition. So that's humming along quite nicely now.
That was their big U.S. acquisition.
Exactly, as I said, now doing quite well.
Yes.
Excuse me, and but on the midstream business, that also is a good business for them, especially as LNG Canada ramps up. And I keep mentioning that it's been a long time coming, but it is coming on here in the middle third of this decade. So as that happens, the whole natural gas space in Canada, I think, changes and becomes more robust in terms of the opportunities afforded. Allto Gas trades at below a midstream valuation, let alone a utility valuation, and they're 65%, I think, U.S. utilities at this point. So the company's undervalued, good chances for dividend growth now that the balance sheet's under control, and I think will trudge its way along through 30 and beyond here in the coming decade.
Okay, TC Energy.
TC, so admittedly I wrote this and sent these in before this week when they reported, and the shares were up $3.50. I liked it a little more at 59 than obviously 59 is better than 63, but I still like this company on a short, medium, and long-term basis because of their ability to move molecules around and off of this continent. They touch pretty much every piece of every major gas field in North America and every major gas export or use in North America, including all the way through Mexico. So, and recently announced some new projects in Mexico. So again, here you're seeing the company, borrowing to finance growth and issuing equity to finance growth, and the market got upset with them for that, and they did their equity issue at 63, shares traded down into the 58 level. Lo and behold, they come out yesterday and say, hey, we're going to sell $5 billion of assets, and people get really focused on the balance sheet and the borrowing side, and they forget how many assets these companies have and what they'd be valued at if they just sold them all. So a nice surface of value by TC to say, hey, we're going to sell this and recycle our portfolio a little bit, and we don't need as much capital from the market as you think we do. So I think that was a sign of strength for them. And again, if the shares drift back down to 60, I like them a little better there on a long-term basis. But even at current levels, it's an attractive dividend, and I think a good long-term holding for clients. And
then finally, Brookfield Renewable Partners.
Yeah, so I kept speaking about this in combination with Brookfield Infrastructure. So I like Brookfield Renewable. You touched earlier actually on the acquisition of Westinghouse. That was going to be one of my key points on this.
Making them a player in nuclear now.
Right, exactly. And so Brookfield owned Westinghouse at the Brookfield level. This is a good example for the caller earlier where they move things around within their portfolio. Now it's a specific part of Brookfield Renewables portfolio that'll be a bigger driver for them than it would be for the larger Brookfield entity overall, just on a percentage basis, right? Yeah. So I like that. I like to see a company I own taking a view on a sector that I would like to see versus me having to do it and put it in the portfolio in an isolated fashion. Now it's in there in a diversified company. Again, when you put Brookfield Renewable together with Brookfield Infrastructure, which is the two represent 5% of the portfolio combined, there you get about a 4 to 4.5% dividend yield, 6% dividend growth ongoing. The expertise of Brookfield's private equity partners around the world to source, purchase, and sell different assets, and then just a great long-term opportunity set for the businesses that they own. So that to me is a great long-term hold for clients and one that'll be important for us, I think, for a long time.
A lot of air came out of the renewable energy space, didn't there? The valuations.
Yeah, so that was that's happened twice actually. So 2020 with Joe Biden getting elected, and then with COVID as well, there was a big move in renewable companies. Then that would be the period of market exuberance, I would say, and then obviously all the cheap capital that flowed in as well. Then they came off last year, and now this year again had a big run into the summer and have come off again due to some resource problems and cost inflation. So I'll be interested I'm speaking with the company in about a week or so. I'll be interested to talk with them about that. But again, you have to let these short-term blips come and go, and keep your focus on the long term for the company.